India may be heading toward higher interest rates, and the rest of the world is paying attention. The Reserve Bank of India is facing growing pressure to raise borrowing costs as inflation remains a persistent concern in the world's most populous country. That pressure is not unique to India. Central banks from Washington to Frankfurt have been wrestling with the same problem for years now. Prices that simply refuse to come down as fast as policymakers had hoped. Here is how rate hikes work in plain terms. When a central bank raises rates, borrowing becomes more expensive. Businesses take out fewer loans. Consumers pull back on spending. That slowdown in activity tends to cool prices over time. But the trade-off is real. Higher rates can also drag on economic growth, and policymakers have to decide how much slowing they are willing to accept in exchange for bringing inflation down. For India, that trade-off carries extra weight. The country has been one of the fastest-growing major economies in the world. A rate increase could put a dent in that momentum at a time when the government has been counting on strong growth to lift living standards and attract investment. At the same time, inflation that runs too hot hits ordinary households hard. It erodes purchasing power, meaning people can buy less with the same amount of money. Neither outcome is painless. Global markets are watching closely because the stakes go beyond India's borders. When a large emerging market signals a shift in monetary policy, investors respond. Stocks, bonds, and currencies all get repriced as the market recalculates risk. Capital flows, money moving between countries in search of returns, can shift quickly. A rate hike in India can ripple outward to other developing economies as investors reassess where to put their money. The bigger inflation story is still playing out. The US Federal Reserve and the European Central Bank have both made clear that their next moves will depend on incoming data. That makes every new inflation reading, wherever it comes from, meaningful for global markets trying to get ahead of what central banks will do next. India fits directly into that picture. What has become clear over the past few years is that central banks got the length of this inflation fight wrong. Most expected it to be shorter. Instead, they have had to keep policy tight longer than anticipated, and some, like India's central bank now, may still have more work to do. The practical implication for anyone tracking markets: watch the inflation data coming out of major economies in the weeks ahead. Central bank signals will follow the numbers. The numbers are where the story starts. This briefing is brought to you by First Financial News. Clear daily coverage of the economy and markets at firstfinancialnews.com.